Okay, so you want to buy SpaceX. Simple enough. Wire the money, take Elon's chair, and walk away owning the rockets, the launch pads, and the company quietly selling the internet from space. You've got the cash. The decision's already made. How hard could it be? But here's the strange part. SpaceX is the most valuable private company on Earth, priced somewhere between $1.75 and $2.3 trillion, depending on the day. It launches roughly 80% of everything humanity puts into orbit. It prints around $8 billion of operating profit a year, 11 of it from a single business. And in 2025, on paper, it lost $4.9 billion. It's the only company where you can wire over $1 trillion, walk away holding the majority, and still not be in charge. Guaranteed cash, a paper loss, a majority that owns nothing. So here's what this actually comes down to. What $2.3 trillion really buys you, from 1% to the whole thing. Where the money comes from, and it is not the rockets. The bill just to keep this thing alive for a single year. And why the smartest money in the room says it's worth 1/3 of the asking price. And why the person who owns the majority still doesn't run the company. Before you can lose money on SpaceX, you have to buy it. So let's go shopping. SpaceX comes in tiers, and they are 4 completely different levels of pain. Start at the bottom. 1% of the company will cost you about $23 billion. Sit with that. Every single percent of this company is a $23 billion decision. For your $23 billion, you get a slice of the upside, a slice of the losses, and precisely 0 say in anything. Want to feel it a little more? 10% runs you $230 billion, still a passenger. Now, the serious money. 51%, an outright majority of the equity, costs somewhere around $1.17 trillion. You now own more than half of SpaceX, and you still don't control it. Hold that thought. And the whole thing, 100%, every share, every satellite, every launch tower, is roughly $2.3 trillion. That's a price-to-sales multiple of about 94. For comparison, Tesla trades at 17. To put the sheer size of it in view, the company's own public offering raised something like $85 billion, and that was just a sliver of the whole. Or if the entire thing is too rich even for you, you carve off a piece. Buy just the Starlink constellation. Buy a single factory or a launch pad. Cheaper, cleaner on paper. And it still drags you in front of the FCC for the spectrum, the State Department for the rocket technology, and the national security regulators for all of it, before you're allowed to touch a bolt. Nothing about this is quick. But whichever tier you pick, the question that actually matters is the one nobody asks first. Where does the money come from? Here's the trick most people get backwards. You think you're buying a rocket company. You're not. In 2025, SpaceX did about $18.7 billion in revenue. 11.4 of that, more than 60%, came from Starlink, satellite internet, a monthly subscription. 9 to 10 million people paying around $81 a month for a dish on their roof, at a roughly 39% operating margin. That one business threw off $4.4 billion in operating profit, and the price is quietly being raised toward $90 a month. That's the flywheel. The rockets, Launching things for outside customers brought in about $4 billion, less than a quarter of the pie. A Falcon 9 seat now goes for 50 to 60 million, and one day a fully reusable Starship might command 200-300 million a flight. There's government money on top, too. NASA is paying roughly $3 billion for Starship to land astronauts on the Moon, and the Defense Department buys national security launches by the batch. But strip all of it back, and here's how it actually works. In 2025, SpaceX flew 165 Falcon 9 rockets. Only 43 of those flights were for paying customers. The other 120 were launching its own satellites. Read that again. Most of the rockets exist to feed the subscription. The launches are the marketing. The monthly bill is the business. You're not buying a rocket company. You're buying an internet company with a very expensive delivery truck. And that truck is where the money starts leaking. Okay, the deal's done. You've signed the biggest check in human history, shaken the hand, popped the champagne. Except nobody actually has $2 trillion in cash. A buyout this size is stitched together from bridge loans, high-yield debt, and mountains of new equity, and every one of those layers charges you interest and dilutes you. Now the bill. Start with the deal itself. Bankers charge 1 to 2% to arrange a transaction like this. On $2.3 trillion, that's north of $20 billion in fees just to sign the paperwork. You haven't launched a single rocket yet. Now the running costs. Research and development runs $3 to $5 billion a year, and that's after already burning more than $15 billion just developing Starship. Every Falcon 9 costs about $62 million to build. Every Starlink satellite, $500,000 to $1 million each, and you've got roughly 10,000 of them that need replacing every 5 years. That's another $5 billion in capital every few years just to stay in orbit. Insurance. The FAA demands a minimum of $198 million per launch. So much of it that SpaceX runs its own captive insurer just to swallow the risk. Payroll for 20 to 25,000 people runs $2 to $3 billion a year. There's a $19 billion spectrum deal. With EchoStar, you're now paying off in installments. And the physical footprint never stops eating money either. From the Starbase launch site in Texas that cost more than $500 million to build, to every factory and pad that needs upkeep forever. And those are just the bills you can see. You also inherit everything that can go wrong. Every Starlink satellite has a 5-year life and then burns up, which means the constellation is quietly falling out of the sky and being rebuilt around you forever. You inherit the environmental cleanup at the launch sites. You inherit the FAA fines when a test flight scatters debris. You inherit any launch that ends in a fireball. Put it together, and SpaceX burns through billions every year just to exist. No new rockets, no profit, just the cost of keeping the lights on. There is exactly one crumb of consolation. That $4.9 billion paper loss creates a tax shield worth maybe $1 billion in future savings. And sure, you could sell a retired booster to a museum for $1 million or $2 million. Against everything else you're paying, that's not a rounding error. It's not even a rounding error on the rounding error. So even with the money machine humming, this is exactly how the bet goes wrong. Because there are two ways to lose on this deal, and they show up over and over. Mistake 1, paying the sticker price. You're being asked for $2.3 trillion, roughly 94 times revenue. But when Morningstar, an independent analyst with no reason to flatter anyone, actually ran the numbers, they valued SpaceX at around $780 billion, a third of the price. Their own note said the number leans heavily on future technology that doesn't exist yet. The gap between those two valuations is the entire bet on Mars, on space-based AI, on things that don't have revenue yet. You're not paying for what SpaceX earns. You're paying for a story. And the whole sector prices this way. Rocket Lab trades at 118 times sales. Palantir at 81. Blue Origin was privately valued at tens of billions, while booking essentially no revenue at all. This is a business where hope costs more than cash flow. Mistake 2, and this one's worse, buying control that isn't control. Remember your $1.17 trillion majority. Elon Musk still holds around 83.5% of the voting power. The shares are dual class. Your money buys equity. His shares buy the decisions. To actually control SpaceX, you'd need to pry his Class B shares loose or force them to convert, and that does not happen without his cooperation. And if you're a foreign buyer, CFUS, the U.S. Foreign Investment Watchdog, can block the entire deal on day one because SpaceX is a defense contractor. It scrutinizes even quiet, passive foreign stakes so hard that some investments have had to be routed through offshore shells just to get near the company. You are not buying this thing without the U.S. government in the room, which brings us to the man himself. Meet Elon Musk, not as the founder, not as the visionary, as the seller who cannot be fired. Rewind for a second. Back in 2008, a nearly broke SpaceX was bootstrapped by a $1.6 billion NASA contract. And from that thread Musk built the most valuable private company on the planet. He also built the ownership structure. That part was on purpose. Here's the picture. You write history's largest check. You buy the majority. And the man across the table keeps 83.5% of the vote and simply carries on running your company. He decides the launch cadence. He decides the R&D budget. After the IPO, his own president floated merging SpaceX with Tesla, a decision worth hundreds of billions, and you, the majority owner, would not get a vote on it. That's the trap dressed up as an acquisition. You don't get a company. You get a very expensive seat next to the one guy who made sure the seat came with no controls. So, with all of that on the table, let's actually do the math. What do you make? Time to pull it together and answer the question this whole thing was built on. You've paid $2.3 trillion. What comes back? Scenario 1, the optimistic case. Starlink subscribers keep climbing. Starship opens up entirely new markets. And by 2030, the company does nearly $60 billion in revenue and about $35.7 billion in profit. Sounds enormous. Now divide it into your purchase price. At $35 billion a year, it takes about 64 years to earn back what you paid. And the whole thing balances on one delicate number, the monthly bill. Shift the average Starlink price by $10 a month, and you move revenue by nearly $1 billion for every million subscribers. That's the whole thesis riding on whether people will keep paying and keep signing up. Scenario 2, the realistic case. Subscribers stall around 10 million, price competition bites, margins soften. By 2030, the company clears about $10.3 billion in profit. Now your payback stretches to more than 200 years. The swing between a good decade and a bad one is around $25 billion a year. And the middle path, the boring base case? By 2030, around $30 billion in revenue, roughly $17 billion in profit. That one takes about 130 years to pay you back. Pick any lane you like. Now do the honest version. Run the present value of every dollar of profit this company throws off between now and 2030, and you get somewhere between $50 and $100 billion against a $2 trillion price tag. The profit cannot catch the price in a human lifetime. Not one, not several. So if you do decide to buy SpaceX, just remember 3 things. The smartest independent money in the room says it's worth 1/3 of what you're about to pay. You would spend $2.3 trillion to own the majority of a company you are legally not allowed to run. And the only person who ever truly owned SpaceX built it from the first share so that no one could ever take it from him. That's the real lesson here. You don't buy SpaceX. You either found it or you rent a very expensive seat and call it ownership. The house always wins. Musk just made sure he was the house.